Hello and welcome to the look ahead for Tuesday, the 22nd of October, with me, Fiona Sincosta, Senior Market Analyst at City Index. So tomorrow, the economic calendar is a little bit quieter. We've got the BRICS summit, also the IMF World Bank annual meeting. In the European session, we have a speech from Bank of England Governor Andrew Bailey, and also ECB President Christine Lagarde is due to speak. As far as US earnings are concerned, will be several earnings in focus, including General Motors and Texas Instruments. But just kicking off with the Bank of England Governor Andrew Bailey. Last time he spoke, he did actually create quite a sell-off in the pound. He suggested that the Bank of England could act more aggressively and actively to cut interest rates if inflation data showed that this was needed. And I think we've had since then the UK inflation data, which was indeed below forecasts at 1.7%, below the Bank of England's 2% target. Inflation, service sector inflation, which the Bank of England watched closely, was down to 4.9%, down from 5.6%, marking the largest fall in, I think, around 4 years. So the data does seem to be moving that way, but we also had retail sales, which remained resilient, suggesting that households are still spending. This week, the economic data is a little bit quieter. We've got PMI figures on Thursday, which will the market will be watching for further clues over the health of the UK economy. But I think, as I said, most attention will be on the Bank of England governor tomorrow to see what he has to say after the inflation data and whether it does indeed mean that the Bank of England are going to ramp up rate cuts. We are expecting the Bank of England to cut 25 basis points in the November meeting. Will the Bank of England suggest adopt a dovish tone and encourage expectations for a December rate cut as well? So that remains to be seen. But if we do have that slightly more dovish tone from Bank of England, Andrew Bailey, we can see here, this is the candle where he spoke last time. Will we get another one of those breaking through that 130 support? That's the key support that we're trying to get below. And I think just under that, we've also got the 100 SMA there at 129.60. And then you've also got that rising trend line support, which dates back to April. So, I mean, there's quite a lot in the way of support in this area that sellers will need to break through in order to continue the bearish trend that we've seen in place since reaching that peak of the 134.20. I say bearish trend, I mean that is at least in the near term, because over the longer term, actually, the pound US dollar remains in an uptrend, and it would actually take a move below that 130 level in order to negate that uptrend that we've seen. It would indeed take a fall below the 126.60 to create a lower low on the longer term chart, and that would take it below the 200 SMI as well. So just whilst we're talking about central bank chiefs, we've also got Christine Lagarde speaking tomorrow, but let's obviously remember this comes hot on the heels of the ECB interest rate decision last week, where the central bank cut interest rates by 25 basis points in line with expectations. They stick with the idea that they're working on a meeting by meeting basis, not wanting to give too much away, but also suggested that their focus is shifting more towards growth and away from inflation, comfortable that inflation has, is falling back to below that level. It is currently at 1.8% in the Eurozone region, so below the central bank's 2% target. But growth is also starting to look a little bit anemic and deteriorating outlook as far as growth is concerned, which may be what's worrying the ECB and could prompt them to cut interest rates more aggressively. Now, obviously, ECB looking to cut interest rates more aggressively against the Federal Reserve, who may not be needing to cut interest rates as aggressively at all. In fact, might adopt a more cautious approach to cutting rates. And that's really contributed to the sell-off that we've seen in the euro US dollar over the past month since the beginning of October. Failed to break down that 108 level. That's going to be the key level for sellers. But, the recovery just at the end of last week failed to retake the 200 SMA, which, I think leaves this as the target on the downside is the 108. If we can get a break below that, then it's going to test that rising trend line support around the 107.65 level. Buyers are going to need to get above the 10, the 200 SMA there at the 108.70 in order to stage any sort of recovery. But the price really needs to get above 110 in order to negate that near-term sell-off that we've been looking at. Now, the other thing that we're just going to talk about, obviously, I mentioned we've got the IMF, World Bank meeting, annual meeting in Washington. So we've got finance chiefs from across the globe will be meeting in Washington to discuss the global economic outlook, and they'll be doing so against a rather challenging backdrop of global wars, of slowing growth, and also of rising debt levels. We also have the US elections, which is creating a level of uncertainty as well, and all that's really helping gold reach all-time highs again today. It's risen to fresh all-time highs above 2,730, around 2,740, I think the all-time high was. It's just easing off those levels as we watch. But I mean, just be careful. This is in over bought territory along the time frame, 4 hour, the 4 hour, the weekly, the monthly. So it is looking a little bit overstretched right now. As far as support is concerned, there's support level here, which is the September high at the 2685 level. And then below that, we'll be looking at this one down here, which is the October low at 2600. We need a break below that in order to create a lower low. So, and just finally, we're going to talk about US earnings. Obviously, season is is really ramping up this week after we had several, earnings season kickoff with the banks just a little while ago, around 10 days ago or so now. Actually, earnings season has been a solid start. We've seen a relatively solid start to earnings season with around 83% of the companies that had reported to Friday had actually beat expectations, and that was ahead of the 79% in the previous quarter. We do have 114 of the S&P 500 companies reporting this week. As I said, those include tomorrow, we've got Texas Instruments, which will keep the chip sector in focus. We've also got this week Tesla, which will be in focus as well as IBM. But anyway, let's just have a look here at the Dow Jones with what's going on. Very much ran into resistance at the all-time high there at just 43,300. And just over that and 325. And we've seen this fairly sharp move lower as the market's just getting a little bit edgy, I think, ahead of the US elections in just a few weeks' time now. So that's that. I think as far as support is concerned, I mean, it's trading above this rising trend line near term. It broke out of the rising trend channel that was dating back to late March. So I think on the downside, we're looking at the support here, this level around here, which is the 42,600, 42,500. That you've got the last week's low, you've also got the high there from September, and also that rising trend line. So I think if we get a breakdown, that's going to bring this 41,900 level into focus, which was the low for October. Below that, we get a lower low, which could see the sellers pick up in momentum. So I hope you've enjoyed what you've seen, and if you have, then please do give this video a like, and if you'd like to see more like it, then please do subscribe.